Hello traders, welcome to another weekly analysis for July 17th to July 21st. Apologize for a late delivery. Monday is as usual quite busy. Well, Monday is usually very quiet at beginning, but it gets busy later on, during the New York session, and then since New York closing, it's really things start getting a little bit busier for me. So just apologize for that. And second thing is that I'm going to deliver this, as before, just as a recorded version. I mean, I'm trying to do a YouTube live, but it just provide a very bad sound quality. It could be my internet connection, but anyhow, unless I figure out how to deal with that, I rather have a much better quality video for now. And it shouldn't affect much because this is really a weekly perspective for the market. Generally, the purpose for the video is to give you a quick glance of what had happened last week, what is most likely to happen this week, and what are some of the trades and trading plans I'm looking at. Now, as you can see, I actually put 2 weeks here. And that's because I realized that although I'm trading mainly in a weekly base, but sometimes I do like to trade into a catalyst, and sometimes those catalysts I like to place the trade maybe before the catalyst happen next week. And I'll give you an example, which is last week, the Bank of Canada trade. I actually took the trade the week before last week, so that's what I'm trying to say. I'm trying to trade into the events. Sometimes I do that maybe on Thursday and Friday and holding over the weekend, aiming for next week. Now this week, for example, I already in Euro trade for long Euro, and that's because I'm expecting a bullish strength into Euro because of the ECB coming up on Thursday. Now, very important thing that I'm trading into the catalyst. That means I'm buying the rumor and most likely selling the fact. That means most likely I like to get out of the trade before the actual events. I'm basically just riding the momentum. So I don't really care whether the actual event is a real expectation or not, because I'm already want to be in profit. And sometimes it does not work that way, which is exactly what happened to the Bank of Canada last week. So, let's just get into it so you have more understanding. Let's talk about last week first. Okay, so just go over some major currencies. So last week, the main events was Bank of Canada. So, although we have a lot of things that is tradable, but pretty much every week you will have 1 or 2 major events that you're looking at. And of course, some week you don't have anything. That's perfectly fine. Sometimes you have more than 2 and 3, and that's also fine. You cannot really time the market by this way. This is not like a regular 9 to 5 job where you say, okay, I'm only gonna work this hour and this hour. It really very go around the market, very flexible. For example, this time usually 7:30 p.m. Eastern Standard Time. Usually I'm in bed already, but I'm still stay awake. For a few things. First, because I'm doing this video. Second thing is I just did a trade for New Zealand dollar because we just had the CPI coming out right here. So I was preparing to trade this, and actually got in, which I will tell you about it later on. So as you can see, it's actually negative than the forecast and the previous. Okay, so talk about last week. Last week, just to recap, last week really the whole market was mainly eyeing for the Bank of Canada, which is here, the monetary policy, the rate statement. And the reason is because, first of all, Bank of Canada suddenly became very hawkish about 2 to 3 weeks ago, and that really surprised the market. And because of that, and then very soon approaching this Bank of Canada rate statement, for the very rarely you actually have economists have very divided views. Some think that Bank of Canada is just talking about raising interest rate. They are not really going to raise interest rate. something that they are, yes, indeed, they are going to raise interest rate. And of course, if you've been following the market, you know what happened. They did raise the interest rate, and that was the first time since 7 years or 10 years, very, very long time, that they actually raise interest rate. This is very surprise, and this is a very strong movement, because if you look at all major currency, the 8 major currency that I'm personally trading, euro, dollar, pound, yen, Aussie, New Zealand, CAD, Swiss franc, CAD is the only currency that is raising interest rate right now. I mean, we have a lot of hawkish comment, from ECB, even from BOE, and you even have expectation for a more hawkish comment from RBA or RBNZ. Of course, both central banks did not deliver that. But regardless of all the talks, the only central bank previously that had raised interest rate in 2017 was Federal Reserve, which is the US. And so it was a big surprise, consider that the Canadian economy, yes, it has picked up, but it's definitely, it does feel a little bit too rushed for them to quickly raise the interest rate. But of course, in a press conference, they gave out a very clear reason that they follow the model, the economic model, and the model always have to basically predict what is about to happen in the future or what's most likely to happen. So that's why they say that, yes, although if you're looking at the data, it seems a little bit early for them to raise interest rate, but according to the model, they will hit the 2% target, and they also raised expectation for CPI and GDP altogether. So not only they raise interest rate at the press conference, they actually become even more hawkish. And that's why if you look at CAD rate, just look at dollar CAD, because that's a more accurate one. If you look at CAD rate, this was the drop, and it dropped even further after the events. So that's why I was saying that sometimes when you trade into an event, you might have a buying rumor, selling effect. That means you might see a completely reversal after a catalyst. But sometimes that will not happen. You actually will see a continuation for the previous movement. And that was the case for CAD. So all the CAD pair actually dropped significantly after the Bank of Canada. So that was really mainly what happened last week, the main events. And another thing is the US data, CPI, core CPI, retail, and core retail. As you can see, all red. Everything is below the expectation, and even more negative deviation, basically, especially for retail data. So that's something very significant. Why? Because dollar right now is in a very peculiar position. Remember in 2017, dollar at the beginning of 2017, dollar was the strongest currency. We had so much expectation. First of all, comes from the Federal Reserve saying that they are finally going to raise interest rate, and they are going to raise 3 times or even more, depending on how the economy is doing. The second force for the US dollar strength was from the White House administration. At the beginning of 2017, there were so many hopes for the fiscal policy, including the tax cut plan to pass the Congress, and then really basically overheating the economy, which caused the Federal Reserve to further raise interest rate in order to cool down the economy. That was the hypothesis at the beginning of 2017. Now we are way past the first half year of 2017. As you can see, the whole White House administration was pretty much a mess. I'm saying a mess not because my political stance, nothing to do with me, my personal stance. It's just saying that a lot of policy that people were expected to pass had not passed, and pretty much nothing really gets done basically right now from White House. So that's the fiscal part. For the Federal Reserve, yes, they did raise interest rate, and that's exactly the reason, because they raise interest rate, they fulfill the market expectation. So you always have to ask yourself, what's next? Now, if the market or the trader cannot find another reason to buy dollar, they will sell it. Remember that the currency market is always in comparison. So there's no such thing as I'm buying US dollar. No, you buying US dollar in exchange for something else. So, if you're not buying US dollar, you're buying something else, you indirectly selling US dollar. So that's why we see a huge drop in US dollar. If you look at US dollar DAX, dollar currency index, continuation of drop, pretty much, this is forward by the way, pretty much since June, we just keep going down. And if you don't even need to draw anything, just see with your naked eyes. This is a very typical lower low, lower high, lower low, lower high. Now another lower low right now. So things are not looking well for US dollar. Technically speaking, look at the price action, but fundamentally speaking, exactly same thing. There is nothing to look forward for US dollar at this point, and that's why people are selling it. Now, some might argue that US is still a strong economy and dollar is still in a hiking cycle. Everything that's very, very logical, but understand that currency market is a highly speculative market, so very few people will actually invest so in the currency, right? We just buy the currency in order to do business. So right now, really nothing to look forward. If you can look at this from a speculator's point of view, what's left for people to buy US dollar? Do we have any events that's going to boost US dollar up in the next half year? No, not really. Now, do we have any fundamental reason, any reason that people wants to buy US dollar in order to do business in US? Originally, that was the hope, if they really passed the tax cut plan or things like that to boost a business investment. But that part had been delayed significantly. So, there's no other reason to really get into US dollar at this point. And that's why we saw a huge drop. So this is a very more of a certain thing that I think US dollar is in a downhill, most likely in the next couple months. Now, of course, you have to watch out what happened in the market. But if we continue like this, if the data continue to disappoint like this, then I don't see any reason for dollar to regain strength, basically. So that's something that I'm more sure. Another thing more sure in the bullish side is Canada, because as I mentioned, not only they raise interest rate, they also raise the projection for CPI and GDP in the future, and also deliver a very hawkish stance. So what happened to Canada right now is that the CAD is most likely going to remain very strong. Now, understand, CAD becomes so strong on the background of a weak oil. So that's a very significant thing to keep in mind, that although oil actually dropped, right, as you can see a bigger trend, oil actually dropped and we are still below $50 per barrel, but CAD continued to gain strength. And for those of you not understand that CAD and oil market usually goes in the same direction, that means they are highly correlated. But in this month, we start seeing a decorrelation. And that, what is that saying is that market right now is really focusing on the Central Bank of Canada instead of the oil market. That doesn't mean oil market is not important. Oil market is still a significant either strength or weakness for CAD. But as for now, Bank of Canada is the strongest supporting power for CAD. So if you want to buy CAD, fundamentally speaking, it's very little reason for CAD to drop at this point. Now, the caveat is that Bank of Canada is saying that they are watching closely for the future data. That means any major data from Canada will be important to basically firm the stance of Bank of Canada or switch their stance. And important data, which means CPI, employment, and GDP. So whenever you look at economic calendar, that's the first three things you want to search for. So for example, this week, if I say I'm personally in Long Cat right now, so if I say, okay, what can be my risk? If I go inside, I realize, all right, there is a CPI here on Friday. So now that will be something I need to watch out for. Now, understand, a single negative data or positive data will not change a central bank's point of view. So you don't really need to worry if you are in a trade with a large enough stop loss, large enough range, then any single piece of data, you don't really need to worry about it. But if you are in a trade in the intraday base, then you have to watch out for the major three fundamental data: CPI, inflation, employment, and GDP, because they might cause your trade to get stopped out if your stop loss is too small or too narrow. Okay, so let's continue our analysis for this week. All right, so first thing, let's look at key events. So this Monday already passed. This week is the second round of Brexit talks. Now, talking about Brexit talk, we have to talk about pound. So let me just drag down to British pound right now. So British pound right now, it's a very tricky currency to trade. Why? Because no one knows where it's going. Okay, to be honest with you, no one knows. You have two sides of forces. One is the economic side. Bank of England has turned to become very hawkish, and they say that they are going to raise interest rate if the inflation continues to go higher. Now, many of you know that inflation went so high for UK is because their currency depreciates after the Brexit. So that's not a good economic case. Normally you want to see inflation go higher because of the economic strength. Means that the employment is at an all-time high, the wages are keep growing, so that's why the goods become more expensive, because we have more demand and supply, and then pushing the price up, so that the producer and everybody has to raise the price level. That's a good inflation. That's an indicator of a booming economy, and that is what's happening in US right now. That's not the case for UK, right? UK inflation shoots up, and you can easily tell why it's not the case, because you have to look at other data. So yes, inflation shoots up for UK, but if you look at other data such as PMI, such as wages, especially wages, such as GDP, nothing really stands out significantly, especially the wages are not even growing. So that is a very hard situation for Bank of England right now, because on the other hand, if they want to control the inflation, they have to raise interest rate. But if they raise interest rate while the economy is not strong enough, that's going to hurt the economy. So for the economic side, it's already a 50-50 chance, right? Because you do have to, how are you going to control inflation? Yes, you have to raise interest rate, but if you raise interest rate, then people are gonna get hurt, right? So that's already a very hard topic. Now, on top of that, right now the geopolitical situation, which is the Brexit negotiation, continues, and this negotiation is in a rough path. And the reason is because the UK government currently, the Conservative does not have the major parliament. They do not control the parliament, so it makes all the legislation very hard to pass. You have a lot of roadblocks in your domestic politics. And then how are you going to basically battle with the external forces? How are you going to negotiate with other people if you basically cannot even take care of your own family? So that's two sides that's really, really tricky to trade. So for British pound, my personal strategy is to basically just trade the risk events. That means I'm only looking to trade three most important events, employment, GDP, and inflation. Of course, the Bank of England rate decision is very important too. So I'm only looking to trade these events. I'm not looking to trade into the events because I don't know what the outcome is. So what I'm pretty much doing is wait for the actual events to happen and jump in when there's a big surprise. Now, that means that the trade will not happen. But if it does happen, it will be a very, very good trade. For example, last week, if we take a look at cable. So cable, although itself has no significant catalyst last week, but because of the weak US data, you actually see British pound and US dollar shoots up. So all this strength was coming from the weak US data, or the expectation of it. So that's pretty much the game plan for British pound right now. And what are the data we can trade this week? CPI. So this will be something we watch out closely, CPI data. Expectation is 2.9, previous is also 2.9. If you have something that's much higher than 2.9, that will be a good chance for you to get into it. If you have something that's over 3, basically. Now, on the other hand, if you have something that's lower than 2.9, something that's lower than 2.5, then you have a negative deviation, means that British pound will drop significantly, because that means the inflation is not high enough. Bank of England does not need to raise interest rate. So that's just a very simple way to trade it. But how you trade it is really depending on your own personal style. Personally, when I jump into these kind of risk events, I always just trying to grab 30 to 60 pips maximum. The reason is because I just don't want to, especially for British pound, I don't want to stay in sterling for too long. I understand that nowadays anything can push it higher or pressure it lower. You basically have too much variable for this currency, and when we don't have enough conviction or enough probability, then if you don't even have a 50% chance for a currency to go a certain direction, then you're just gambling, basically. Then if you're gambling, that's not a good strategy for trading. Oh, sorry. Just give me 1 second. All right, so let's keep going. Euros, the Euro final CPI. This is actually not that important, but since why it's not important? Because we have a ECB for Thursday. That means most people are not going to look at other data. People are looking at this ECB interest rate decision, and they try to trade into it. And right now, since the expectation is for ECB to give some tapering talk or give some hawkish comment, that means people are going to buy into euro into these events, and that's one of my trade right now. Is I'm buying euro into the ECB events. Now, of course, if ECB events, if ECB does not deliver, that will be very negative for euro. If ECB does deliver, then you have to ask yourself, what's next? You see, that's an interesting thing, because no matter what ECB does, euro actually have a higher chance to drop after the event. And if euro continue to go higher before the event, that means the possibility for it to drop after the event is even higher. So that's my game plan, is to buy into this event and then sell after the events. And that's just, understand these underlying emotions, or basically the traders' motivations, will be very important to trade, because a lot of people like to trade this data point. But for me, I look at market as a player. I look at market as people, right? What are people thinking? What are people feeling? And that's what's really excited about, to understand what are the human behavior. We call that economic behavior, because that's a much more predictable pattern, the human behavior. And let's continue. So another thing is CPI. As I mentioned, New Zealand CPI just came out at negative than expected. So if you take a look at let's just say New Zealand dollar, then you see we just have the huge drop here. So I did not getting, unfortunately, and the reason is because we don't have a deviation. Although the data is low enough, it's not in a deviation point. So I didn't get in because of my rules. However, I did actually use these events and trying to get into a long newsy. Now you might think, why am I long newsy out of a negative data? The reason is because although the CPI might not be so positive, but it's not bad, it's not below zero, basically quarter to quarter. So it's already expected to be lower. And now it's just a little bit lower than that. So it's not really a big surprise. And if you're looking at year to year, which is not showing here, it's also dropped 2%. But nevertheless, it really depends on what pair you choose. Now I choose Newsy Swiss mainly because I think Newsy still has a way much stronger fundamental strength than Swiss franc. So this event, although this huge drop, only gonna give me a good level to get in Newsy Swiss loan. And don't forget, Swiss franc is a negative interest rate currency. So anybody who is shorting Newsy Swiss have to constantly pay the interest. So it's not a position that most people trader wants to get in. If they want to short Newsy, they probably pick something else other than Newsy Swiss, because there's no other reason to buy Swiss franc either at this point. So that's why I picked this trade, because it dropped, it's in a good level, and fundamentally I still have enough bias. So sometimes you see, that's how you trade a catalyst. You can trade into it, trade at it, trade after it. You can trade in the direction of the result. You can trade on the contrary of the result. You can just trade in opposite with the result. So it's different way to play it, really depend on what is the market doing and your basically a fundamental and micro view of the market. Now later tonight we will have the RBA monetary policy minute. I don't think this event it's not tradable for me, because I normally just don't trade this kind of events because I don't read these minutes fast enough. But other than that, it should create some volatility for Aussie. And if we're speaking about Aussie, let's take a look at what happened to Aussie right now. So Aussie right now, I give it fundamentally neutral and sentimentally strong. Now Aussie, really nothing happened last week. We don't have any catalyst. So I can just tell you outright what's supporting Aussie right now. It's first, it's high yield currency. So once the US dollar loses its strength, people are going to look for another currency to buy. And right now, the only two currency that has the highest yield is Australian dollar and New Zealand dollar. Then why do people choose Australian dollar? Now, it's a much bigger economy. That's the first thing. Second thing is the recent China data had been quite stable. And the third thing is that the commodity, that's very important. The commodity market had recovered. Now, if we speak of commodity market in a relationship to Aussie, of course, you have to take a look at the iron ore and copper, because those are very important correlation with Australia. I don't even know if I have this. I don't think I have this. Just give me 1 second, guys. I'm trying to open my commodity chart. I think that's the one. Alright, it's not. Okay. Alright. I think this one. Alright, that's the one. I'm pretty sure this is the one. Alright, it's not. So nevertheless, if you take a look at iron ore, okay. Just gonna go to investing.com. By the way, if you're looking for a free website to give you, economic data, things like that, investing.com so far is one of the best site that I find for the free website to give out this economic calendar or a result very, very fast. So it's not bad to actually have this. This is not bad. Now, of course, I'm not affiliated with this. I'm just give you a tip that if you're looking for a free website that give a good economic release, I think this one is better than Forex Calendar. However, I do like to use Forex Calendar just because the view is really nice. I do like to have this kind of, broad view with a nice color. Also, the color sometimes is wrong, but in terms of speed of the release, investing.com is much better than Forex Factory. So as you can tell, iron ore keep going up, and the reason I know is because I was looking at it when it's still below like 55, 56, 57. Right now we are continue to go higher for iron ore, and that's one of the reasons to support Aussie. So two reasons to support Aussie right now is a US dollar weakness and a commodity market recover. Now on top of that, the trivia reason is because the Chinese data had been okay. It's not really perfect, but it's stable. And also Aussie is a high yield currency. So with all these reasons, and people are start buying Australian dollar again. Now, because we don't have any catalyst, generally speaking, we do have catalyst, which is RBA later tonight and employment data, but it's not a catalyst I particularly interested to trade. I'll see what happened after RBA and then find a good general direction for Aussie to decide whether I want to buy into or buy at employment data events for Aussie. But generally speaking, if all things are equal, Aussie is not a bad currency to buy right now, especially if you're buying it against Japanese yen or Swiss franc, which both are very, very low yield currency. So that's my game plan. Now, CAD I already mentioned about it, and this Friday we will have the CPI, which again, one single data is not going to change a Bank of Canada's position, but it can create a short-term volatility. So if you are in CAD trade without a big stop loss, then you better, you can either get out or just be careful when you going through these kind of events. So that's my game plan. Currently, I'm in CAD Yen and UZ CAD. So let's take a look at. And speaking of CAD, I got in CAD, as I was mentioning, I got in CAD to sell into it last week. So I got in here, as you can see this line. I got in here a week before last week and trading into the Bank of Canada. And this red thing is a day or 2 days before Bank of Canada. So basically, I was hoping right here we see another drop, and that was not the case. The trade actually reversed. Excuse me. So the trade reversed before the Bank of Canada, and at that time I thought, okay, this is a typical buying rumor selling fact, and I was so surprised that it's already started before the event. So I was thinking, okay, people are not going to sell it anymore because they expect Bank of Canada to raise interest rate. That means there's no more catalyst to buy into Canada. So I got out basically at break even for Aussie CAD. Then that's a huge drop. So Bank of Canada delivered the rate hike, and Aussie CAD dropped. And the worst thing is that I could have finished the week just like that, like, okay, it's down, I'm probably wait, but I got in at retracement, so I got a short again right here. And if you look at hindsight, it's perfectly logic. At that time I thought CAD is continue to remain strong, while Aussie will probably lose the battle versus CAD, and we are right at this previous resistance level. So I got in here thinking, when I see this red candle, I was thinking that okay, things are looking well. Another red candle, and then boom, we got stop out, right? So why? I think I probably underestimate the strength in Australian dollar, because there's nothing wrong with CAD. If you're looking at dollar CAD, it never recovered, right? It went up it went down very well. If you're looking at New Zealand CAD, which is another trade, it retraced but failed to do so. So New Zealand CAD was the profit one for me. Again, I got in here a week before last week and shorting into Bank of Canada events and got out here. You see a very, very small range. But I was happy because my stop loss was very low as well. And then again, same as Aussie, when I look at this kind of green candle, I was thinking, all right, the event is finished, even before the Bank of Canada comes out. I was a little bit surprised. I'm saying that, okay, the buying rumor selling effect is happening right now. But then right after the Bank of Canada raised interest rate, boom, the market continued to react. And same as Aussie, I bought at the retracement. But unlike Aussie, this one did not get stop out. Almost, but did not get stop out. And that means the price action, just from the price action point of view and fundamental data point of view, market is still very resilient for CAD other than New Zealand. And of course, we just had a negative CPI from New Zealand today. That's why we have this another drop right now, right here. So this was the New Zealand CPI. So I'm still in this trade, and now because the negative CPI in New Zealand, I am more confident to hold this trade in a much longer stance. Really just looking to hold it for quite some time. All right, so let's continue. That was the trade I took last week. Another one is CAD Yen, which I'm still in, and exactly same thing. I missed the initial one, shoots up Bank of Canada, and then we had a retracement here, which is also the previous support. So I got in right now and basically just, almost at a break even. But I did not say to break even because I really believe CAD Yen is going to keep going higher. So as for CAD, Swiss franc, if you've been following me, you know that I really don't trade I really don't have anything to say about Swiss franc other than that it's a safe haven currency. It goes around with a risk sentiment, and usually I don't like to buy into it. So if I have a very risky events happening, I rather buy into Japanese yen. And the reason is because Swiss franc or Swiss National Bank is being known for notorious with their interventions. So if I wanna play Swiss franc, I rather short it. I rather go with the side of the central bank. So I am in New Zealand Swiss loan right now, which essentially means I am shorting Swiss franc, and that's the only comfortable Swiss franc trade I will most likely do. Now, speaking of that, let's just jump in ahead first and speaking of Japanese yen, because Japanese yen is exactly the same game plan and strategy. It's a safe haven currency. We're not expecting to see it regain any strength. This week's Bank of Japan will announce some announcement, but I think most likely it will be a non-event because Bank of Japan is not looking to raise interest rate anytime soon. Everything else will just be about some trivial things. So that's what I'm thinking right now, and that's my game plan for playing with Japanese yen. Currency looking to buy into right now is CAD yen, which I'm already in. Euro yen is not bad, but because of the ECB, you have to be careful for large profit taking. Euro dollar is also not bad, which I'm also already in. And Euro pound, I'm also in, but I try to get out, to be honest, because I don't have that much conviction toward Euro pound anymore because of the basically the irrational movement for British pound. And that's pretty much it for Japanese yen. So let's keep going. Where are we? CAD. We're talking about CAD, Swiss franc, Euro, as I just mentioned. So the game plan for Euro is also very simple. Buy into the catalyst of ECB, setting the fact of ECB, and then perhaps to re-enter after the ECB. So you see one catalyst, I actually have a potential to trade it 3 times. And that's the beauty of trading catalysts. It's you really just want to find that very high quality catalyst, and you can really try to make some money out of those catalysts. A lot of people, they like action, so they try to trade every day in the market. But if you're trading every day in the market, you are not trading a high quality catalyst, and a lot of time you end up doing a lot of work without getting paid, and that for me is really the worst situation. So Euro, that's the game plan, is buying it into the ECB, and then at the ECB I will try to get out of before the ECB. British pound, as I mentioned, we talked about that already. Japanese yen, New Zealand dollar, talked about already. So now right now it's just US dollar. Now US dollar also talked about already. So that's pretty much it, for this week, and that's pretty much all the key events. Tomorrow's CPI, Bank of Canada, Carney will speak. Bank of England, Carney will speak. New Zealand dollar GDT price, Australia employment data, crude oil inventory, and Bank of Japan interest rate and press conference, European Central Bank interest rate and conference, UK retail sale, RBA assistant government speaks, and finally we finish the week with core CPI and retail sale from Canada. The currency that I'm really bullish right now is Euro and CAD. Now Euro might lose some momentum from this week's ECB because I think ECB is very well known for its dovish stance and secretive. Like they are not that outspoken compared to other central bankers. But regardless, I still think Euro is way much stronger than British pound. As for CAD, because of the strong hawkish comment from Bank of Canada, I'm still very much bullish in CAD and will get a chance to rebuy it if we have a good level. Other than that, British pound, Australian dollar, these are just remain a quick scalping trade. I'm not really looking to swing. Watch out for CAD data on Friday because any negative data will not give a significant movement, but it will give you short-term spikes, which can and could get you out at stop loss. And next week, of course, you can take a look at on your own calendar yourself if you're choosing to enter into a trade. Right now, I don't have anything, so I will see how the week unwinds. So the only thing I am really looking at, as I mentioned, euro dollar, I'm really looking at see if it can shoot up 115. And euro pound, I am underwater because I got in at here. So I'm trying to see if this is the bottom and then we can slowly climb up. But I'm really not confident in this trade because I think I enter in the wrong place at the first time. I shouldn't even got into this trade. CAD yen, I'm still very confident to hold it, same as New Zealand CAD. And New Zealand Swiss is the only counter trade I have, which is I'm going against the fundamental data because I'm going against the sentimental data because the fundamental bias. So I might be wrong, I might be right. We'll see what happens. So guys, that's pretty much it what I'm looking at. Of course, you have to understand this is just a market overview for the beginning of the week. And understand market is very, very dynamic. It's very flexible. So things can change very fast. Remember to do your own research before you take any trade. Don't just follow my weekly video because again, if tomorrow something major happens, this video is pretty much pointless. You don't even need to watch it. But if you watch the video, decide to take a trade and have a lot of doubts, feel free to let me know. You can email me and I'll give you some of my insight because who knows, maybe you're looking at the same trade I'm interested to take right now. Okay, so that's pretty much it. I hope again it's really good for you to learn and trade. I think that's for me personally the best way to learn how to trade fundamentally because unlike back testing, you don't really have any tools to back test. Only thing you can do is forward testing. If you want, you can open a demo account and start trading fundamental data and see how the price action relates to that. Of course, you can also forward testing with a small amount of capital, but nevertheless, you have to start trading live, either with demo or with small cash. The reason is because there is no Forex tester for you to fast forward the learning curve. So the sooner you start, the better you might get. Okay. So that's pretty much it. I hope you enjoyed this video. Again, apologize for the late delivery and apologize for not able to do a live stream, but I will try to figure out both things and perhaps get back to you in the near future. Thanks for watching. Have a great trading week. And once again, if you want to watch this video, sign up for my website. It's completely free. I do deliver weekly video once a week. If you want to follow the news update, you can basically, depend on what forum you are in. If you are in the Walter Peters forum, you can always just contact me there. If you are not, if you are just regular member through my website, you can always email me. And if you are not on my website, you can always just follow my Twitter or tweet me if you have any question. Okay, all right. I hope you have a safe and wonderful trading week. See you next week. Thanks. Bye-bye.